increasingly aware of all of this, AI and quantum. Last week in Saudi Arabia, it was very apparent that they want to become a global hub and that the U.S. wants it to build on the tech stack. What do we have to know about how the lines are getting drawn geographically and geopolitically around all this?
Yeah, this is a critical moment right now geopolitically for AI. What's the jump ball right now are the Gulf states. Between the competitiveness of U.S. and China, the People's Republic of China and the U.S., there is a major AI race going on right now. And the Gulf states, Saudi Arabia, Qatar, Bahrain, UAE, these are the key places that will determine which way they will go. Will they side with the U.S.? Will they side to China? So far, the U.S. has been successful drawing them to our side, but it means continued engagement. So I think the president's trip was coming at a critical moment to engage with those Gulf states and to make sure that they're engaging with us in a key ecosystem. The fundamental announcements made last week, particularly with chips now being sold to UAE,
NVIDIA,
to other
AMD.
countries. Jensen was there on the ground.
Mm-hmm.
And again, Jensen's one of our partners, NVIDIA one of our partners as well. It's critical to see that kind of exchange of technology with the Gulf states.
Why?
We're
what does
very
it mean for
supportive
China?
of that.
And what is your latest read on China's capabilities at this point?
China is putting it all on the table. I mean, they're pushing all the chips on because they know how critical AI and quantum are. Quantum's important. Right now, BlackRock just issued an announcement just the last few days of the threat to Bitcoin. Bitcoin started moving in the last 48 hours because of BlackRock's disclosure that quantum one day will undermine the cryptography of Bitcoin itself. So that's something for investors to watch there.
Quantum will undermine Bitcoin?
That's right, because the current structure of Bitcoin is structured on cryptography. The crypto and cryptocurrency is cryptography. And BlackRock just announced the last 48 hours in a disclosure that quantum is a key threat to the current way. Now, what Bitcoin has to do is, as a community, is change out that cryptography for quantum safe cryptography. So that's what's happening with China there. And then on AI, China is all in. You've seen DeepSeek. You've seen Alibaba's Qianwen.
People are using it here.
It's worldwide. And so it's critical that the Gulf states, that U.S. engage the Gulf states. That is a critical piece on the chessboard right now to make sure that they go with us and not with China. And that's why this trip was so important at this moment.
Well, we're lucky to have you to break all this complicated stuff down for us. Thank you, Jack. Always good to talk to you.
Great to meet you, Sarah.
Love the hat. Jack Hittery, Sandbox AQ. Back over to you guys, Mike.
Sarah, thank you. Coming up, Apple could be facing a surprising new competitor, according to one of the street's most closely followed analysts. Those details are next. Plus, President Trump on Capitol Hill this morning meeting with GOP members with some new color from those conversations just coming out. We've got those details next. Breaking news from a very busy Capitol Hill. Let's get to Emily Wilkins. Hey, Emily.
Hey, Carl. Well, yeah, Trump has been meeting with Republicans for almost an hour now, talking about this big mega tax bill that he's trying to get passed. And we have a few more details about what those conversations were like. Trump's main message for those in the room was to get unified, get on board, and get this bill passed. He says he is tired of grandstanding, that he wants to move forward. And that included a couple specific provisions that have proven to be sticking points. SALT, those state and local caps. He basically told New York and California lawmakers that are pushing to raise them even higher to let it go, to drop it. Seems like he wants them to take that $30,000 cap that's currently in the proposal. He also had a message to fiscal hawks, specifically those who were looking for further cuts on Medicaid. Trump says that he wants to, of course, cut waste, fraud, and abuse, but he specifically told lawmakers to don't. And then he dropped an F-bomb and then said, do anything with Medicaid. So very passionate, very fiery language there. Clearly, the president was fired up heading into this meeting. Right before he entered with lawmakers, he told reporters that he, again, needed Republicans to fall in line, and even called out Congressman Thomas Massie, who, if you'll remember, has opposed a number of these major bills in the past. Listen to what Trump had to say.
I don't think Thomas Massie understands government. I think he's a grandstander, frankly. He'll probably vote. We don't even talk to him much. I think he should be voted out of office. And I just don't think he understands government. If you ask him a couple of questions, he never gives you an answer. He just says, I'm a no.
Of course, now the big question is that did Trump's effort today on the Hill make an impact? Has he gotten some who are still a no on the bill to convert to a yes? We're expecting to hear more from lawmakers as they leave the meeting, but a few who left out early told us that Trump probably did change a couple minds in there. If the president comes in and is giving a directive that he does or does not support a certain policy, it's very difficult to argue against the president on that. Speaker Mike Johnson is hoping that he can pass the bill this week. His target date was Thursday, but the real deadline is before the Memorial Day recess. Lawmakers want to get this done in the House so the Senate can do its work as well. Guys?
So obviously investors are watching very closely, and there's been more jitters around what the fiscal situation looks like. What at this point are we looking at in terms of potential deficit drags?
Sarah, that's a really great question. We're still waiting for the official estimate to come out, but a number of other groups have looked at this bill, and most of the estimates I see suggest that it's going to add a little north of $3 trillion to the deficit when all is said and done. And how Republicans will quickly counteract that is say, well, look, if we pass this tax package, that will lead to additional growth in GDP, in revenue. They also point to things like tariffs and DOGE. Of course, DOGE did not ultimately cut all that much at this point, and we'll see exactly what the outcomes are on tariffs. I think for a lot of these lawmakers, they really do want to keep the fiscal piece in mind. At the same point, they know that if they don't go ahead and extend this 2017 tax package, which cost trillions of dollars to do, then millions of Americans are going to see an increase in their taxes. And they know that that's not something they can let happen. And that's putting a lot of pressure on them to find a way to cope with the fact they will probably add trillions of dollars to the deficit.
Yeah, and a bunch of promises on top of the renewal of the 2017 bill, too. Emily, thanks very much. Apple could be facing a surprising new competitor, according to a well-respected Apple analyst. Steve Kovac has those details. Hi, Steve.
Hey there, Mike. Yeah, this is coming from Ming-Chin Kuo of TF International Securities. He's kind of the GOAT when it comes to predicting what gadgets companies are going to be making. And today he's saying Amazon is actually working on a foldable device. It kind of sounds like a foldable Kindle Fire tablet. And Ming-Chin Kuo kind of compares this to some things that Apple happens to be working on as well, including a foldable phone that we're expecting to launch as soon as the end of next year. But more importantly, beyond that, in 2026 or 2027, this kind of hybrid foldable iPad, MacBook thing, whatever you want to call it, that also seems to be on the roadmap, at least according to Kuo. And he really just nails it. He's so good at predicting what companies are going to do months or years before they do it. I'll just note that this is likely a project on the Amazon side behind Panos Panay. He was the head of devices over at Microsoft until about a year and a half ago. And, you know, all those Surface computers and tablets and other gizmos that come out of Microsoft, those were all his brain children, so to speak. And now he's over at Amazon trying to do the same thing. He has that big big Alexa Plus rollout that's happening right now, and then also some devices. I will note, though, he does have some experience with foldable devices. Microsoft used to have the Surface Duo phone, which ended up being canceled because it didn't sell very well. Maybe he'll have a second shot at here, guys.
Steve, thanks. A lot of device news in the last few days. Steve Kovac today. Meantime, BTIG is hosting its annual charity day today, where the day's net commissions are donated to a number of nonprofits. Our Contessa Brewer is live on the scene this morning with a special guest. Morning, Contessa.
Hi there, Carl. Good to be with you this morning from BTIG's trading floor. And with me, Alec Baldwin, one of the very many people who are coming through. You know, Stephen Starkey, the founder, said this is the one day they're focused not on capitalism, but on giving back. What charity are you raising money for?
For the Arthur Miller Foundation. Rebecca Miller, the daughter of Arthur Miller, contacted me to come on behalf of the foundation, which is a big educational arm of Arthur Miller's charity.
I know that you're getting ready, correct me if I'm wrong, but you're getting ready to go shoot a movie in Europe. Is that right?
I think I am.
Yeah. Oh, okay.
Nowadays, you never know.
We know that the White House administration is looking for ways to bring business back to the United States and talking about tariffing international films. How would that affect the movie industry?
I don't really know, other than the idea that if you and I are doing a movie, let's say you're an actress, and we're doing a movie and it says we're going to have us walk at the end of the romantic comedy at the base of the Eiffel Tower. Where's the Eiffel Tower in the United States?
Las Vegas.
Well,
I mean, like, well, I cover Las Vegas.
Brewer, no. But I'm saying that there are things that have to be shot overseas, and the overseas film community is really a benefit to all of us. It's more work. So I don't think the tariffs are really a great idea.
You've been off of a really rough period of time. How has that changed the way you're approaching movie making and life in general?
I don't want to work anymore. I want to stay home with my kids. So that's really where I'm at right now. It's just, when I leave home, I'm unhappy, and when I stay home, I'm happy.
We've seen some other well-known famous faces here. John Ledecky of the Islanders, Chelsea Clinton has been through, Kevin Dillon. They're talking to me a little bit about the trades they're going to make. Do you have in your mind that there's a stock that you want to trade?
I don't intend to tell you that on the air right now. I have a lot of secrets.
Okay.
As most people know, I'm kind of the Nostradamus of the stock market. I know what's going to happen.
Okay.
Years, centuries in the future. So to myself.
Thank you. Appreciate it. You know, they've raised, Sarah, $60 million here over about 2 decades. So it's a really big deal for BTIG to be involved with this and for the celebrities and the traders as well.
Yeah, nice to see every year. So many different folks come out for the good, for raising money. Thank you for charity. Contessa Brewer at BTIG. Up next, Wolf Research's head of U.S. policy on what the uncertainty around the budget bill means for investors. Plus, Home Depot holding on to gains on the back of earnings, making some revealing comments about tariffs. That story and more when Squawk on the Street comes right back.
Beauty.com.
Welcome back. The president speaking with House GOP members this morning about the budget bill, telling representatives he's tired of so-called grandstanding and not to mess with Medicaid. Joining us this morning is Tobin Marcus, Wolf Research Head of U.S. Policy and Politics. Tobin, it's good to have you as we watch some of this sausage get ground. You do think this ends up happening, although not easily, right?
I do. I think that they have to succeed, and so they will ultimately succeed in getting this bill done. We've been expecting July as the likely time frame for final enactment of the bill, ahead of the twin deadlines of the long August recess, and even more importantly, the debt ceiling X date, which will probably fall sometime in August. That's a really immovable deadline that they're in a very, very tough spot if they can't get this done in advance of it. But I think between here and there, we've still got about 10 weeks, and I think there are going to be some twists and turns.
What's your thinking now, given some of the long-term debt concerns versus policy that's going to be somewhat stimulative to the economy?
Yeah, so this bill in our reckoning looks like it is expansionary over the next few years. Not so much this year, but in 2026, those numbers get pretty material, a little over 80 basis points of GDP. And over the long term, you know, if you fully extend the expiring provisions in this bill, which I think is a reasonable expectation, it's about $3.7 trillion in addition to the deficit relative to current law. That, I think, is well within the range of expectations for what the cost of this bill would be coming into this year. But I do think that markets are starting to tune into that now. So, I think it's a story about upward pressure on the long end of the yield curve, about term premia. I don't think it's big enough to kind of tip us into some acute bond vigilante crisis. But, the fiscal situation's bad and getting worse, and we're seeing that in the long end of the curve.
Yeah, it's certainly paying attention to it more. Moody's warning only sort of reinforcing that. The fact that the headline from the president is "Don't F around with Medicaid," is this finally going to quiet all the Democrats that have been fear-mongering about Republicans and the president wanting to cut Medicaid and your health care?
Well, so the bill does have about $715 billion of Medicaid cuts in it right now. I think the president's message in this meeting was to tell the conservative hardliners not to push for further cuts to Medicaid, where they had been pushing to accelerate the work requirements in the bill, to add in some cuts to the funding for the ACA expansion population. So even if you freeze it as it currently exists, there's a quite substantial amount of Medicaid savings they built into the bill that some senators on the Republican side, like Josh Hawley, have raised concerns about. So, the Democratic ads write themselves. They have a lot of muscle memory about running against healthcare cuts. I think they were planning to do that regardless of what the bill looked like, but they certainly do have a target there.
Yeah, we're going to get a chance to hear what the Senate thinks about all that, which will add another layer of complexity later on. Tobin, thank you. Good to see you. Tobin Marcus over at Wolf.
At Home Depot, missing earnings estimates for the first time in 5 years, but the stock is gaining. With one analyst forecasting a double-digit rally ahead. Don't go away.
Is market volatility here to stay? One portfolio manager says he's planning on it. He's turning towards tech stocks that blend strong growth outlooks with low relative risk. Tune into our Market Navigator segment later on today on Power Lunch to see which stocks could be poised to outpace the market, 2 p.m. Eastern Time.
For what's ahead.
Welcome back. Home Depot out with quarterly results this morning, beating on revenue, missing on earnings, and reaffirming, importantly, its full-year guidance. Also taking a different tone on tariffs than Walmart, saying it doesn't plan to increase prices. Joining us now is D.A. Davidson Managing Director Michael Baker. Curious what you make, Michael, of the strategy to publicly come out and say that it is not going to increase prices because of tariffs. First of all, how hard is that for Home Depot and its competitors to do, and why do you think they said it?
Yeah, it's a little bit more of a conservative approach relative to getting in the crosshairs with the administration, I think. I don't really think the different strategies are that different from each other. Home Depot is going to use a portfolio approach. What that means is that there might be some areas where prices go up, other areas where prices don't go up or even come down, such that on balance, the basket of a project or of a consumer spending won't really change too much. Again, I don't think that's that different than Walmart, where Walmart said they will be aggressive in some areas to try to take some market share. I just think it's a different signaling and different posturing. And for whatever reason, Walmart was just a little bit more aggressive in their messaging, I think trying to get the administration's attention. Home Depot just a little bit more conservative in how they're talking about it.
Well, I think the question for investors then is, do we expect margin pressure on Home Depot if they're going to have to eat more cost when it comes to the tariffs, not passing it on to the consumer? I think they said they source half of their stuff from overseas.
Yeah, and one of the positive messages from this morning, I think, is that Home Depot does have some offsets within their cost structure. Shrink has actually been very good for them, of all things. That's been an improvement 6 quarters in a row now. Supply chain costs are coming down as they're getting a little bit more efficient there because of leveraging past investments. So all those things enable them to absorb some of the tariff costs within their margin structure, but still show margins where they thought they'd be at the beginning of the year, which, to be fair, is down a little bit, but because of some of those mitigating factors that they have.
How do you think about the company as it's navigating through this period and what you're paying for it? I mean, revenue this year for Home Depot is virtually flat with 2022. And we've had inflation in the general economy up quite a bit since then. You know, net income, cash flow, anything you look at has kind of been steady state for 3 years. They've really slowed down the stock buyback, which used to be a big part of the story. So when you're paying, mid-20s multiple, why is that at this point?
Sure, it is a premium multiple. Now, remember, that buyback was slowed down because of the big acquisition that they made a year ago. But it is a premium multiple. I think that premium multiple really it looks forward to a housing recovery. To be fair, that recovery does keep getting pushed off a little bit. But, to me, it's positive that they've been about flat this year in an environment, the stock price that is, and their sales, in an environment that really has not been great for them. So I think what we're paying the premium for is doing okay in a tough environment. Eventually that environment gets better, and that's where we should see a lot of leverage.
So interestingly, the Home Depot CEO, the Walmart CEO, and the Target CEO went to meet with President Trump last month to talk about the impact of tariffs. Now we've seen sort of how they're coming out on earnings and talking about it. Tomorrow's Target. What do you expect there, and how much more pressure will Target be under now to say that we're not raising prices? Can they do that?
Yeah, again, it is tricky, and every CEO and every management team seems to be taking a little bit of a different tact. I would think that Target would be a little bit more conservative in their messaging. Target has not been doing as well as Walmart, certainly, both in terms of their sales trends and their stock price, and we think we'll see that again when they report tomorrow. In other words, negative comps, whereas Walmart has been taking share and comping positively. Walmart just seems to be in a little bit more of a position of strength where they can be, I think, a little bit more aggressive in their messaging. I would expect Target to play it a little bit closer to the vest. Target has been in the crosshairs with things like DEI and boycotts and other things, and I think the last thing that company needs right now is to show up on Truth Social or something along those lines.
Yeah, every company's worst nightmare right now. Michael Baker, thank you very much. We'll look for those earnings tomorrow.
Sure, happy to do it.
Meantime, still to come, Amerisports surging on double digits on the back of earnings, making some comments of its own surrounding tariffs. We'll get those details after a break. Don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street podcast. Stay with us.
I think we have unbelievable unity. I think we're going to get everything we want, and I think we're going to have a great victory, and this man has done a great job. And I think this was a tremendous session. You may want to say something.
Yeah, it was a great meeting. The party is unified. The House Republican Conference is excited. multiple standing ovations.
That's the president a few moments ago, just walking out of his meeting with House GOP, trying to mend some of the rifts in between these House GOP factions as the speaker tries to get that bill to the finish line ahead of his suggested Memorial Day deadline. We'll get you details as we get them further in the morning. Meantime, shares of Amer Sports, the parent of Wilson, surging over 15% this morning after new numbers, some bullish commentary when it comes to tariffs. Our Brandon Gomez is here with more on a 17% gain today, BG.
Hey, Carl. Yeah, look, it was a beat on the top and bottom line today. The big question going into earnings, though, was China and tariffs. Investors got their answer in the guidance, raising Q2 adjusted EPS and 2025 revenue growth, now expected between 15 and 17%. Prior guide was 13 to 15%. CEO James Zheng saying he's confident the company can, quote, manage through a variety of tariff outcomes, largely because of light revenue exposure to the U.S. America made up just 26% of total revenue in 2024, with sourcing from China to the U.S. only making up 8% of that number. Guidance assuming U.S. tariffs on imports do remain at 30% in terms of China and then 10% on all others. I will add, too, that the company said even if after the 90 days they were to go back up to the 145, they only expect about a 5-cent impact from tariffs for the full year in 2025 EPS.
Okay, Brandon, quite a move. Up almost 18%. Brandon Gomez. Up next on Money Movers, the CEO of Pinterest joins me live from CNBC CEO Council Summit, talking AI, growing competition, and more as Google reportedly plans to enter the ring with a new image service of their own. Plus, do not miss our David Faber's big interview, 2 p.m. Eastern Time, with Elon Musk. After Musk said at a Qatar forum today he's committed to leading Tesla for the next 5 years and will spend, quote, a lot less on future campaign donations. Tesla shareholders like the sound of that. We'll be right back.
It means everything.
Good Tuesday morning. Welcome to Money Movers. I'm Carl Quintanilla, live at Post 9 of the New York Stock Exchange, alongside Sarah Eisen, live from CNBC's CEO Council Summit today. First up this morning, Tesla's on a tear. Shares up about 100% in the last year. Elon Musk says he'll stay at the helm for at least the next 5 years.
Plus, Pinterest outperforming some of its social media peers, up 10% on the year. CEO Bill Reddy joins us here at the CEO Council Summit this hour. And summer travel demand about to kick into high gear as the industry continues to sort through FAA flying challenges. We're going to get the latest with Frontier CEO Barry Biffle coming up.
Meantime, some moderate weakness this morning. S&P 5940, Dow's down about 140. As some of the Treasury yields have been a little challenging this morning. 10-year got above 4.5. 30-year once again approached 5, but we've backed off just a touch this morning. Let's begin with mega cap tech, specifically Tesla this morning. Elon Musk saying that unless he dies, he will remain at the helm of the company for at least the next 5 years. We're going to learn more later today during David Faber's rare interview with Musk, live from Tesla's Austin headquarters. That's coming up at 2 p.m. Eastern Time. In the meantime, we're joined now by Tesla analyst Jed Dorsheimer from William Blair. Talk about some of the headlines that he made, Jed, addressing this Doha conference. What strikes you as most important? He talked a lot about his political involvement, his concerns about pay versus ownership of Tesla overall.
Yeah, I mean, I think the key here is the fact that he's not going anywhere. And I think if you're a Tesla shareholder, you really want to know that. So I think that 5-year window is a good thing. And in particular, if you look at Tesla, Tesla has always been a company really about innovation and then scaling that innovation. If you think back, it's been about, moving from high price, low volume EVs to high volume, lower priced EVs. And today, we think it's about energy and a combination of moving from EV to autonomy. And those are the two driving factors. So Elon staying there for the next 5 years, I think will be music to shareholders' ears here.
Right. He did suggest that he thought certainly the European sales trajectories are beginning to reverse to the upside. But what really is on the line for Austin? It's really not that far away now, is it?
Yeah, I mean, Austin is going to be ramping, in terms of the AV and the robo-taxi. And, I think some of the key challenges would then be on the, tax credit. And do we see that go away, which that could be, a little bit of a monkey wrench here in the very near term. I think the other thing that Elon needs is, to use the analogy as a plane, he needs altitude. So he needs time to have some of these things bake, if you will, and see whether or not, that attachment to the political side, which right now, it can be seen as a negative, if we start to see success from some of these policies, that could flip around and be a tailwind. So those are kind of the pros and cons of it right now. And I think overall, him at the helm will be seen as a positive.
Jed, on demand, here I'm at the CNBC CEO Council Summit. We talked to the CEO of Carvana yesterday, and I was asking him where are the best deals on used cars. And one name that did come up was Tesla, which is a reminder that prices have been pressured. That's the used car market. But I am curious what investors need to know about where margins are and whether we've seen the lows there if demand is starting to turn around. How you're thinking about that?
I mean, it's a great question. And the key here is going to be on that tax credit. So if you see, a repeal of the tax credit, the $7,500, then there's, margins will go lower, and that will be negative for the shares. If that is not cut, then I think we may have seen a bottom with respect to that. So we'll have to see how that plays out. That's one of the things that we should have greater clarity over the next few months on.
Yeah, and then the other thing we talked about was sort of the international competition, the BYDs, the Chinese automakers. It's no coincidence. Elon was in Saudi last week with President Trump. I was there. I saw him. He's speaking at the Qatar Forum. I wonder what the international exposure and demand picture looks like, especially incorporating some of these markets in the Gulf that clearly have a lot of appetite for Tesla. They're not protesting like in Europe or like we've seen in some parts of the U.S. and also potentially not as hit in China with sort of nationalist concerns. How do you add all that up?
I mean, I don't see that so if you said, Jed, is Tesla an auto EV company and that's it? That would be the primary concern, and that would be a negative in terms of that competition. I kind of come back to this issue of, you asked a great question around margins. We look at the energy business. That's only 14% of sales, but it's 25% of the profits for the business. And then you look at the launch of autonomy. Now, if autonomy is successful, that's going to be accretive to the margin structure of the business. So the key for Tesla is, can they transform again in terms of their business, or are they going to be subject to the competition from, BYD into Europe, for example? And the bet that we're making is that that they will be able to transform this business, and that's why we have an outperform rating on the on the stock.
Yeah, well, when we have more space, we'll talk about some of the competition. Certainly, the Chinese and the Toyota with a new EV here in the U.S. Coming. Jed, appreciate it very much. Good to see you, Jed Dorsey.
Thanks for having me back, guys.
In terms of political spending, I'm going to do a lot less in the future, according to Musk. I'm eager to hear more from David Faber's interview later. Turning to Washington, President Trump speaking to House Republicans on Capitol Hill this morning to try to build support for his so-called Big Beautiful Bill. Our Emily Wilkins joins us with the latest. Emily.
Hey, Sarah. Well, yeah, that meeting is just breaking up now. Trump, of course, coming in with a message to Republicans to unify, stop grandstanding, and to get the bill done. But from a number of Republicans that I spoke with while they were leaving the meeting, he hasn't fully gotten everyone to yes yet. A number of holdouts, a number of fiscal hawks saying they're going to still have to review some stuff in the bill. There continue to be concerns about Medicaid. Of course, Trump basically told members using some pretty colorful language to not touch it, except for waste, fraud, and abuse. And Republicans who I've spoken with say, look, we still think that there's waste, fraud, and abuse that we haven't cut. There are taxes that states levy on healthcare providers. They have some concerns about those, want to see some of that changed in the bill. You're also, of course, seeing a lot of discussion around those state and local deduction caps. Trump told members within the room that they needed to leave it, keep it at that $30,000 proposal that's currently in the bill. Of course, you have about 5 members right now who say they will sink the bill if it doesn't get higher. So Trump gave that message directly to them. And he also spoke pretty clearly on it outside the room. Listen to how he characterized SALT as being an issue that would mostly benefit Democrats.
We got it done. Now people want to change it. So we're going to be talking about that. But the biggest beneficiary, if we do that, are governors from New York, Illinois, and California. And those governors are the ones that blew it because they weren't able to get it. So I think we're going to be explaining that these are all very blue states.
More discussions are expected today on the bill, including Speaker Mike Johnson going over to the Senate side and meeting with Senate Republicans there. And we expect, of course, more discussions to be happening internally. The next big moment seems to be coming up Wednesday morning at 1 a.m. A group of Republicans are going to meet to prep this bill for the floor. And any changes that they're going to be made will need to be on paper, and the details will need to be there then. That's really going to be one of the last changes that the House has to tweak this bill before you go to a vote of the entire House. Guys?
So with the reversal of SALT, Emily, does that change the calculus of how much support the president has in the House? What are the numbers looking like?
I mean, Sarah, we're going to have to see. Members were still coming out of the room at the point right now. And so we haven't gotten to a chance to really chat with some of those holdouts, see how they're thinking about this. But certainly when you talk to a number of the members who are pushing for a higher SALT cap, they frequently referenced how Trump had campaigned on this, how Trump had said he was going to do it, how they had the president's support and backing. That's no longer a case that they can make. And the fact of the matter is that they need savings in this bill. And this SALT cap technically counts as a savings because remember, if they did not get it done by the end of the year, the cap would be eliminated and the cost would rocket up. And so there's a lot of pressure on keeping the cap where it is currently at that 30,000. We'll have to see if there are any other changes they can really make to this bill to get some of the fiscal hawks on board when it comes to cuts and to addressing the deficit.
Yeah, Lawler's on the tape right now. While I respect the president, I'm not going to budge on SALT. We'll continue to watch that today, Emily, with your help. Emily Wilkins in D.C. Meantime, some breaking news from the FDA. Our Angelica Peebles has details. Hi, Angelica.
Good morning, Carl. That's right. The FDA is setting new guidelines for what it's looking for COVID vaccines. They're now saying that for most people, so people ages 6 to 64, they want to see randomized placebo-controlled clinical trials to prove that getting a booster can actually reduce some of those severe consequences like hospitalization, death, etc. For older people, seniors 65 and up, they'll take immunogenicity data, which is basically showing that you can elicit an immune response from that shot. Now, this is a change because, of course, we've had these boosters every year for the past few years, and it works the way that flu works. But now the FDA is saying that they want to see data that actually makes a difference and that we need this annual booster cadence that we've had for the last few years. And if you take a look at Moderna and Pfizer stocks, are actually both up because even though you are narrowing that recommendation, saying that not everybody needs a booster anymore, it's hard to see exactly who else would come into this market now, right? If you have to conduct these large, expensive trials, you might not get other new entrants. And so I think that's why you're seeing a little bit of a boost for those companies today. There will be an event later today where we will hear more from FDA leaders about this change, and it is quite a big change. So we'll come back with any other headlines we hear on that. Carl?
Yeah, that is some much needed relief for some of these names, Moderna in particular, on a day where RFK is testifying. Angelica, thank you. Angelica Peebles. Still to come this morning, the CEO of Pinterest is going to join us at the CNBC CEO Council Summit. Stocks up about 10% this year. We'll talk about what the company's seen from consumers, their use of AI, and potential competition from Google when Money Movers continues after this.
Welcome back to Money Movers. Take a look at shares of Pinterest, up more than 10% year to date, outperforming a number of social media and tech stocks, including Meta, Reddit, Google. The company coming off of a revenue beat earlier this month, reporting record global monthly active users in the first quarter. And joining me here from the CNBC CEO Council Summit is Pinterest CEO Bill Reddy and our own Julia Borson, who also covers the sector. Bill, it's great to have you here.
Thanks for having me.
So what is the primary driver right now of record users and engagement and double-digit revenues?
Yeah, so we've had a real transformation of the platform over the last 3 years, and we've really used AI to make Pinterest a great place for users to go shop, curate their interests. We make great recommendations, and Pinterest has really become the place that Gen Z not only goes to shop, but also to search. We see that 39% of Gen Z users are choosing Pinterest as a first place to search, even over traditional search engines, particularly around shopping, fashion, beauty, apparel. All these things are great places. It's becoming a great place for users to engage in these things. And that's really working well for our business.
Now, you have a very different kind of search. You have visual search and also something you call vibe search. How different is that than searching on, say, Google, where you worked for many years?
Yeah. So one of the really unique things about Pinterest is it's the only place in the Western world where users go save and curate their interests. That gives us really amazing signal for our AI to go make great recommendations to users as to what might be interesting to them. So users can come in and just put a basic little bit of expression of interest, maybe a handbag or something like that, and we'll help them put a whole outfit together around that in their style and taste. Our taste graph grew more than 75% over the last 2 years. And so that's really, if you ask a Gen Z user why they go to Pinterest, they'll say, well, Pinterest just gets me. And sort of that's the technology behind it, is the AI that's powering those recommendations.
One thing that I think is so interesting is while users save so much information on Pinterest, they're planning, and that gives you unique insight into the health of consumers and how they're planning to spend their money. I understand you just mined that data to give us some new insights into what you're seeing now in terms of the health of the consumer.
Yeah, that's right. Pinterest is a place where users go to plan and make intentional purchases. So we don't just see what users clicked and purchased, we see what they're planning to do in the days, weeks, and months ahead. And so we do see that consumers are becoming more conscious about their purchases. So budget-related searches, for example, on things like beauty or apparel or makeup or weddings are up over 200% year on year. Sort of affordable wedding choices up 4,200%. Courthouse weddings are up. So people are being intentional about their purchases.
Weddings?
That's right. Yeah. So people are being
money.
Yeah, people are being intentional about how they spend their money, but Pinterest is a great place for users to go and be thoughtful and intentional about those purchases, and for us to give insights to advertisers on those things.
Well, I was going to ask what you're seeing from the advertisers right now, given the spike in uncertainty in corporate America right now. Has that actually been reflected in terms of decisions and spending?
Well, consumers do shift behaviors quickly, and so advertisers are looking for that insight, and so we're engaging with advertisers on exactly that to help plug them into
But are advertisers pulling back?
Well, we just recently gave guidance, and we gave guidance stronger than what people expected. And I think that's really about our platform being a performance-oriented platform. So I think advertisers are demanding more performance, but that's been part of the transformation of our platform over the last 3 years, is to make it really a performance advertising platform.
But some of the categories where you've been growing, like autos, are expected to really, pull back spending in terms of this, the economic uncertainty and volatility. And I wonder if the expansion of your variety of advertisers who are spending on Pinterest in a way exposes you more to the volatility, because now you do have an auto ad business that you maybe didn't a couple of years ago.
Well, it's been an emerging category for us, but we're roughly 1% of the overall ad market. So if you look at us over the last few years, we've grown much faster than the ad market overall. So we've been a share taker in the market. So as a smaller player in that market, even if the market maybe feels some contraction, we think we can still continue to be a share taker, even if the market does tighten a bit.
Speaking of share, did you see that? So Google has its I.O. today, and they are may unveil a Pinterest-like feature for consumers that shows images designed to give people ideas for fashion or design. How do you feel about that?
Well, there's a lot of competition in the space for sure. And even with a lot of competition in the space, you've seen us be one of the fastest growing properties, really because we're at this intersection between social search and commerce. And the things that happen on Pinterest where users curate is completely unique in the Western world. And there are other platforms, Instagram's had the ability to save for a long time. Google Image Search has the ability to save. But Pinterest is a place where people come to primarily engage in that kind of curation. And it gives us a really great signal to train amazing AI. I shared recently that our new multimodal visual search model outperforms off-the-shelf models by more than 30 full percentage points. And that's because we have some amazing AI engineers, but also because the uniqueness of that curation signal from our users, where there's lots of other places that know all the things that you bought, all the things in your closet, They don't know how you style them into an outfit. We actually know how people style them into an outfit. It gives us a really unique ability to engage on those things. And we've seen lots of other platforms have similar features, but not that same. Well, they have the ability to save, but it's not really a place where people go to search and curate necessarily to style the outfits and those kinds of things. So I think we're still quite unique in that respect.
I think it's so interesting that your background was, before you were at PayPal, you were at Google and worked in search and in ads. And here we are expecting this announcement from Google, seeming to go in direct competition with Pinterest. What is it about your technology that you think would help you compete with Google if they decide to really try to create a rival to Pinterest?
Well, I think there's room for multiple winners, right? If you step back, for the last 15 years, I think search has been fragmenting for the last 15 years. And while Google has remained the strongest player, I'd say, in general purpose search, there are many sort of fit for purpose searches. How many product searches start on a place like Amazon or things like that? And we think that for visual search, for product related searches, particularly around the things where it's a visual in nature type of journey, and that's true for shopping, for travel, for a lot of categories, we think we're quite unique in that respect.
How do you think the industry is doing on safety? You have been out front on trying to be the positive, so the one that's okay for our kids to go on. It doesn't feel like it's getting much better out there.
I'd say, I feel really great with the progress that we've made. We've been a huge advocate for youth online safety, as you called out. We're the only social media platform that is private only for under 16 because
yes, but what about your competitors?
I think what I would say is I think there's still a lot of room for the industry to evolve. I think this industry needs accountability. And when we did private only for under 16, we did that because we looked at it and we just didn't think it was safe for kids under 16 to be contacted by strangers online. So there's still some fundamental issues like that I think need to be addressed across the industry. But I'm hopeful that if we can prove there's a good business model in a more positive social media, that hopefully that can be contagion that others start to compete on. I'd love to see a world where social media companies were competing on their safety records the same way that auto manufacturers compete on theirs.
That'd be good as moms as well. Bill, thank you. It's good to have you here.
Thanks
good to see you. Bill Reddy is the CEO of Pinterest. Julia Boorstin also here with us. We have all the big guns here at the CNBC CEO Council. Back over to you guys.
All right, Sarah, thanks. Still ahead, Home Depot CFO saying they don't plan to raise prices due to tariffs. We're going to break down those comments and their latest earnings. Plus, don't miss David Faber's interview with Elon Musk today, 2 p.m. Eastern Time from Tesla's headquarters. They'll talk about advancements in autonomous, robotics, and a lot more. We'll be right back.
NBC Plus.
S&P and NASDAQ slightly lower this morning, but our next guest is pretty optimistic, thinks the S&P might hit 6,600 by year-end with the right policy alignment. Joining us here at Post 9 this morning, UBS Global Wealth Senior Portfolio Manager Alan Rexhoff. Alan, welcome back. Good to see you.
It's great to see you, Carl. It's,
what needs to go right to get a number like that?
Look, so we saw a consolidation in April. We saw the worst market since the Great Depression, then we saw April end up. And we think that the market has sort of recalibrated and now is ready for the potential of an upside surprise. Our base case is 5,800, 5,900, which is where we are right now. But I think the market may not be fully pricing in the opportunities that lie ahead once the tariff noise is in the background and the president can implement his policies, which are pro-growth.
So you're talking tax cuts, deregulation, anything else?
Yeah. So I mean, the market is reacting to the ability of the president to implement, I think, three main things: deregulation or consolidated regulation, consolidation of debt consolidation, and innovation, all in the context of fair trade. You know, we've had free trade for so long. Now it looks like the market is comfortable with the president's ability to negotiate fair trade. And if we wind up, you know, UBS at the end of the year is looking for 15% across the board tariffs, 10 to 15%. That's coming off of a 2.4% average, 2.5% average tariff going into this year. So if that all works out in the context of fiscal responsibility, I think you could see huge upside in the market. Not our base case, but I think we have to be prepared for an upside surprise.
Right. Would the Fed cut in that scenario?
So I think that as we transition, and we saw this in March and April, you will have some slowdown in growth. We're not looking for high GDP numbers for the end of the year. And I think during that consolidation period for the Fed, they, like every other country in the world seems to be doing, should cut interest rates. We're looking for 100 basis points in cuts by the first quarter of next year, 75 basis points in cuts this year. And I think it all pretends what the president's ability is to implement his policies, because I think a lot of the noise has faded into the background. And with UBS's global footprint, we're hearing from clients that they're voting with their wallet, and you see the money coming back into the United States.
So, Alan, does the march higher, this creep higher in bond yields, test your bullish thesis on stocks?
Yeah, so we're looking for 4% 10-year bonds by the end of the year, and we had the 30-year touch 5%.
We're going the other way.
I'm sorry?
We're going the other way at this point.
Right, and we saw the market going up in yield, and we are going the other way right now. But I think that what you're going to see is you're going to see some consolidation in the economy over the next few months. In that context, I think you'll see the Fed pressured to lower interest rates. The Fed is reactive to data. They are not forward-looking. They are reacting to data, much like, you know, debt rating agencies are looking in the rearview mirror. So is the Fed. But I think that during that time, once they see the data of where we have been, they will lower interest rates, and that will portend lower rates in the short term. And we're really focused on the belly of the curve, you know, the 5-year. I think 5 years at 4%, that's a great deal.
You know, Jamie Dimon made some comments yesterday, Investor Day. He used the word complacency on markets. I know that he has been negative before, and the markets ignored him. You know, to their credit, the hurricane never came. But he did say we haven't seen the effective tariff rates yet, and warned of earnings growth to take a hit on that. I mean, that still is a big risk out there.
Right. And I think that what you've seen is the markets are digesting the fact that we're dealing with reasonable players, and that ridiculous tariffs are not tenable, and that we have people who are willing to sit down and negotiate deals. And at the end of the day, it's going to be good for America, and by virtue of it being good for America, it's going to be good across the board, across every economic sphere in America, and what's good for America is good for the world.
Sounds like an environment where you would probably favor financials, materials, cyclicals, what?
You know, I think that we can't ignore the innovation that's happening in the world, artificial intelligence, the innovation in energy. I think that if I were going to pick two sectors, artificial intelligence, technology, energy would be my focus. The president, this administration, doesn't want to put their finger on the scale to say that clean energy of a certain type is the right energy. But the idea of advancements in nuclear energy, the idea of advancements in artificial intelligence, which speaks more towards electricity than it does a new internet, I think that this is going to have a profound effect. One thing that Carl wanted to point out is the president issued an executive order talking about artificial intelligence and education in artificial intelligence, making the United States the hub of artificial intelligence. Artificial intelligence is going to affect every aspect of our lives, from what we buy to what we learn to the travel we do.
This is very true. Anyone who's watching someone learn these days in school, it's a new influence. Alan, thanks. Good to talk
Carl,
to you.
It's always good
We'll
to see you,
how the year
Sarah.
goes.
See you next time.
You too. Bullish as ever. Thanks, Alan. Time now for news update. Silvana Hanau has it for us. Morning, Silvana.
Hey, Sarah. Good morning to you. The United Kingdom announced this morning it paused trade talks with Israel, leveled new sanctions against West Bank settlers, and summoned its ambassador after Prime Minister Keir Starmer said he was horrified by military escalation in Gaza. New Israeli strikes killed dozens of people in Gaza Tuesday, despite mounting international pressure to stop military operations and open the flow of aid into the enclave. A New Jersey congresswoman is now facing charges for a scuffle at a privately run immigration detention center in Newark last week. Interim U.S. Attorney Alina Habba, that's an appointee of President Trump and his former personal attorney, brought the case against LaMonica McIver. McIver denies wrongdoing and calls the charges politically motivated. And Louisiana's Attorney General announced the arrest today of a jail employee in connection with that mass inmate escape in New Orleans. The AG's office says a maintenance worker turned off the water in the cell after inmates asked him to and never reported it. The inmates broke out using a hole behind a toilet. 6 remain at large, now on the 5th day of the search, Sarah.
It's like a movie.
It really
okay,
is.
Silvana, thank you.
You got it.
Coming up, the CEO of Frontier Airlines on his expectations for travel demand this summer, plus, of course, his take on the recent tech outages at Newark Airport in New Jersey. Stock is down more than 40% this year. Money Movers. We'll be right back.
Crypto Watch is sponsored by Crypto.com. Crypto.com is America's premier crypto platform.
Welcome back. Shares of Home Depot rising after the company did reaffirm guidance. The CFO telling our Courtney Reagan they don't plan to raise prices due to tariffs. Courtney joins us this morning with more. Hey, Court.
Hi, Carl. Yeah, so unlike Walmart, Home Depot intends to hold prices steady in the face of tariffs. Chief Financial Officer Richard McPhail tells me, quote, we anticipate that 12 months from now, no single country outside the United States will represent more than 10% of our purchases. So because of our great scale, the great partnerships we have with our suppliers and productivity that we continue to drive in our business, we intend to generally maintain our current pricing levels across our portfolio. Now, this assumes current tariff levels, the universal 10% tariffs on imports and 30% on China. McPhail says, quote, cost is fungible. So in total, if we lower that cost pool in the business, it allows us to keep value sharp for our customers. As for its current exposure to China, McPhail would only say that Home Depot has significantly lowered its penetration of purchases from China over the last several years, and that more than 50% of total purchases are sourced in the U.S. Now, McPhail also explains 80% of its consumers are homeowners who he says remain resilient and healthy with jobs and strong income growth, along with 50% home price appreciation since 2019. Still, there is some skepticism that Home Depot will truly be able to maintain prices if tariffs stay where they are. Walmart imports only a third of purchases compared to half for Home Depot. And Walmart has said that China is its biggest country of import, to be fair. But it has larger economies of scale. It also has a large, diverse vendor base with varied sourcing geographies and other profit streams like advertising and membership to help offset higher tariff costs like Home Depot is talking about. Yet it has said it cannot absorb, this is Walmart, all the costs of tariffs at these levels. So it's very, very curious how these companies are working through this financial engineering, Sarah.
Yeah, I wonder what Target will say about it tomorrow. Courtney,
Totally
thank
agree.
you.
Mm-hmm.
Courtney Reagan. Yeah, it's gearing up to be a busy weekend as we get set for the unofficial start of summer. More than 45 million Americans are expected to travel domestically over this Memorial Day weekend, according to AAA. That would set a new record. And it's in line with what our next guest is seeing in the airline industry, pointing to strength in bookings and pent-up consumer demand coming back in time for the warmer weather. Let's bring in Frontier Group CEO Barry Biffle to learn more, Barry, because a few weeks ago you warned about consumer demand and rising uncertainty. What are you seeing now?
Yeah, thanks for having us, Sarah. Yes, it's night and day. I mean, if you go back to March and April, there was significant uncertainty. We're seeing that now bounce back. 3 weeks ago, I think we called the bottom. And what we're now seeing is loads and fares are now up year over year for May, which is a stark contrast to what we saw back in March. And I think what happened is the consumer paused. And now that's pent-up demand. They didn't lose their jobs, so they're like, okay, well, I'm going to go on that summer trip or that Memorial Day trip. And so we're seeing good demand. And in fact, Sunday had the highest load factors we've had in over a month. So we're really seeing that consumer come back with a vengeance. And I think it's turning off the seatbelt sign. I think you've got smooth skies through the summer at this point. I think we scared people for a little bit a month or two ago, but I think people are returning to their normal travel patterns.
Despite the confidence surveys, the consumer confidence readings, which continue to show deterioration in the way Americans are feeling.
I know. Listen, I see these things myself. There's what they say and then there's what they do. And I think people get nervous, and there was a lot of reasons to be nervous. I think if you go back 6 to 8 weeks ago, but I think as the dust has settled and the uncertainties kind of come down, I think it figured out, okay, well, if I'm not losing my job, then all right, I'm going to go about my life, and that's pretty much what we're seeing. Is we're seeing, bookings are coming back, people are back to travel, and so we're excited about the future. Like I said, it's much smoother than it was just 6 to 8 weeks ago.
I don't think you're huge at Newark, but is there any impact on your business from what we've been seeing in terms of the delays at Newark? Also, Denver had some hiccups on your performance.
Yeah, so we've had no major impacts. We're watching it very closely, obviously, but I'll tell you, we're excited. I mean, Secretary Duffy is bringing some common sense approaches to these issues. We've got to change some of the technology, and they're working on that. He's looking at ways to kind of mitigate the staffing issues, and there's ways to kind of lessen that workload. But no, I think every month we should see it start to get better. We're not out of the woods with all the challenges we've had with air traffic control, but I think by this time next year you're going to see a stark difference. I think in 2 years, even bigger difference. I think we're on the right track there.
Barry, I keep coming back to what Bob Jordan of Southwest said a few weeks ago. We were asking about, airlines were having a tough run. Are we in a recession? And his line was, I don't care if you call it a recession or not. In this industry, that's a recession. And I'm just wondering what accounts for the difference in tone between your comments and his.
I think about 3 to 4 weeks. If I go back to where I was in mid-April, things were very difficult. I mean, we saw dramatic. We went from being up 19% in unit revenues in January to roughly flat, and to be down double digits in March, and to now be bouncing back to be positive year over year in May. That is one of the shortest demand shocks I've ever seen in the industry. But I'm not going to fight it. Right? It's good to see the consumer coming back. And I think there were a lot of things people paused on. Look, if this was a kind of a 2-quarter recession for our industry, well, I'll take it. But I'm not. You don't look the gift horse in the mouth. If the consumer's coming back, we're excited about it, and we're excited to carry them this summer.
What about tariffs, Barry? Is there an impact there on the cost of the airplanes, and do you feel like that's going to impact some of your transactions?
No, we don't expect to pay tariffs. We're not passing tariff costs on to consumers. We don't see this as being a major impact to our business. I think the uncertainty that some of it caused maybe impacted the consumer demand back in the March-April timeframe. But I think the bark has been much greater than the bite across all industries when it comes to the tariff world.
Well, Barry, that's a very positive, bullish outlook you got there. Thank you very much for joining us to talk about how much it's changed. Barry
Thanks for having us.
CEO of Frontier. Thank you. Google's annual developers conference kicking off today. Can the company evolve search without killing the business model that made it a $1 trillion company? That's what we'll discuss after the break.